I'm so glad and thankful that you made it. I told him yesterday, and I'm going to say it here, he was the most challenging person to pull to Bentonville because it's always traveling, always all over the world. And thank you for choosing to be with us today. I hope it's a rewarding experience. So permit me to welcome to the stage the World Bank Chief Economist on Africa, Albert.
So, good morning, ladies and gentlemen. Good morning. Good morning. Wonderful, it's better. My name is Albert Zeufack, and I'm not German. I work for the World Bank. I'm from Cameroon. I've been working for the World Bank for more than 20 years. And in the span of my career, I've worked on all the regions of the world. I actually spent half of my career working in East Asia. I was stationed in Bangkok in Malaysia, and at some point I actually took leave from the World Bank to advise the Malaysian government. I was the director of strategy and chief economist for the sovereign wealth fund, Khazanah, in Malaysia, and still came back to the bank. And that's why certainly I disagree with Toyin. I'm not the smartest person in this room because I was making more money in Malaysia than when I came back to the World Bank. But the reason why I did was this calling of making sure whatever I've learned, whatever I do, helps pulling people out of poverty in Africa. And that's what I do on a daily basis at the World Bank, but not by dishing out loans and money, as you would think, but by doing analytical work, by conducting research and writing papers and books that inform the design of our operations, but also inform the conduct of economic policy across the continent. So what I will try to do this morning is to discuss macroeconomic prospects for Africa and insist on the importance of improving policies, especially the business climate. So I'll go through very quickly our projections, growth projections on the continent, and walk you through why we believe 2018 is a good year for Africa. Then I'll discuss the changing patterns of Africa's trade, and I think it will be important to realize that trade between Africa and the US is actually on the decline, despite the existence of AGOA and all the efforts some of you in this room are actually putting in. And trade is actually now driven more by China than the US on the African continent. Third, I would discuss why we need to continue working with our governments to create the right policy space, the right reforms, implement those reforms for private investment to prosper. Because growth and poverty reduction go through job creation, which is actually done by the private sector. So let me start very quickly on the macro outlook. And first, let me say that despite the discussion in the press about Africa's collapsing, the end of the Africa rising narrative, Africa remains the second fastest growing continent in the world, just second to East Asia. And on the chart you see here, you'll realize that the average growth for Sub-Saharan Africa is still above that of other developing regions of the world, and including Europe and Central Asia. So what has happened in from 2014 when the commodity prices collapsed reflected on Africa's growth. And what you see here on this red line, you see, when you see the dip in growth starting from 2014 to 2016, led to Africa's growing at its lowest pace in 2 decades. In 2016, average growth rate for Africa was only 1.5%, which is below population growth, which means basically that our continent has actually regressed in 2016 and 17. Now, in 2018, we believe it's going to be a better year. Growth is back on the continent. We project that average GDP growth for the continent will be 3.1% in 2018. And this is the first time we will have a positive per capita growth, which means for the first time since 2016, GDP growth is going to be higher than population growth, which is 2.6% in average. What you should also notice on this chart is that the average growth rate of the continent between 2010 and 2015 was around 5%. So we are still far from the average before the commodity price shock. So we need to continue implementing macroeconomic policies. We need to continue deepening structural reforms to speed up growth on the continent. The second thing I would like you to notice on this chart, and this is the middle and the panel on the right, is that if you exclude Nigeria, South Africa, and Angola, the rest of Africa is still growing above 5%. So it is important to account for heterogeneity when we discuss growth performance in Africa. And as Salim was saying earlier, when you hear media speak about Africa, it's always like it's one country. And you probably know of this very important person in the US who asks, what is the capital city of Africa? Well, there isn't. Sub-Saharan Africa alone is 48 countries, and there is a huge variance, huge heterogeneity in growth rates. Nigeria, South Africa, and Angola make up, however, 60% of our GDP. So when these economies are affected by exogenous shocks, such as the collapse in commodity prices, they pull the average growth down for the continent. But when interesting political and economic transitions are happening in South Africa and in Angola over the past year, it gives us more hope and leads us to think of growth moving forward as actually speeding up. And more importantly, it is linked to a commodity price rebound. So what I would like you to focus on is the fact that despite all those exogenous shocks, even when the crisis was at its deepest, a number of African countries remain resilient. In fact, a number of African countries took advantage of the crisis to accelerate their growth rates. These are economies that are more diversified. These are economies that are not dependent on one single commodity export. So, on this chart, you see the top two bubbles. The top two bubbles are countries that were growing fast before the commodity shock and that are still growing faster after the shock. So in the first bubble, the green bubble, you have Ethiopia, Tanzania, Rwanda, countries that were growing above 5% between 1995 and 2004, and who are actually growing faster between 2015 and 2017. Next to that bubble are countries that have actually improved their performance. Côte d'Ivoire, Ghana, Kenya, Mali, Senegal. All these countries were actually growing slower because they are net oil importers. And because of the collapse in oil prices, they could actually import cheaper therefore, run lower deficits and power their growth faster. We have a number of countries that we call stuck in the middle who are basically muddling through. Before and after the crisis, they are basically growing below the average of 5.4%. Number of countries in the two bottom bubbles are commodity exporters and fragile countries, those affected by conflict, those affected by civil unrest, countries in the Sahel who are suffering the impact of Boko Haram, countries including mine, Cameroon, where Boko Haram is actually disrupting the business or disrupting life in the northern part. But what is absolutely important is Africa is still growing and growing fast. Indeed, 6 of the 10 fastest growing economies in the world are in Africa. And I think it's important in that growth narrative, when we discuss economics, that we do realize that growth in Africa may be pulled down by a number of countries because of their weight in our GDP, or because of exogenous shocks, such as commodity prices decline. But the rest of Africa is actually doing well. And if you are an American business, you want to invest in Africa, there are plenty of places, plenty of countries where you can actually profitably run your business. Now, what made growth positive and what is actually making our growth projections optimistic is the fact that global economic conditions have become extremely favorable between 2017 and 2018. Global growth has been quite strong. And when global growth is high, trade between Africa and the rest of the world is higher because the rest of the world imports African goods, and they do increase their imports, and that has a positive impact on African growth. The second positive global trend is that commodity prices have rebounded since 2017. Oil alone has actually increased by more than 60% since 2017. So countries that are oil dependent are having a little bit of a break, but it is important, and in my work when I interact with policymakers, I do warn them that a strategy, a growth strategy, a development strategy based on a single commodity is actually betting the future of their populations. We need to work with African countries. We need to create the right business climate for private sector to come in and help diversifying these economies away from commodities. Then capital flows have actually increased as well. And, FDI has increased. And those favorable global conditions, we believe, would position Africa to grow faster. On the continent, macroeconomic policies have also improved. Inflation has actually eased. And on the chart you see here, you can realize the average inflation in 2018 is lower than it was in 2017. But most importantly, there are less than 5 countries in Sub-Saharan Africa where inflation rates are above 20%. 2 years ago, countries like Angola still had 40% inflation. So central banks have been working hard to actually rein in inflation, and that is certainly good policy with impact on consumers and investors. Exchange rate have also stabilized. Number of large economies in Africa have adjusted the exchange rate. Nigeria has devalued its currency, for example, making it more competitive to export. And this has certainly been a good reaction. And we'll see later in the presentation how this is actually affecting spreads. So if you look at bond and equity flows to the continent, we have also seen an increase. Just in the first quarter of 2018, for example, African countries have issued more Eurobonds than in the entire year of 2017, just in the first quarter. And this chart is also showing you how flows, financial flows to Africa have actually, improved. And the sign of that improvement is that the yield on bonds issued by African governments, the yields have actually come down. So basically, those bonds are less risky than they were before. And countries are actually taking advantage of still available global liquidity to actually tap capital to invest in infrastructure. Unfortunately, some countries are still borrowing to consume instead of borrowing to actually close the infrastructure gap that is a huge constraint to private sector. But at the World Bank, we work with all these governments to try to align, try to ensure that those policies, those macro policies, are business friendly. Fiscal deficits have also narrowed over the past 4 years in Africa, as you can see on this chart. And again, when you break down fiscal deficit, across Africa, and especially if you exclude oil exporting and mineral exporting countries, the rest of Africa is actually doing better. Non-resource rich economies are actually running lower deficits. So these are all encouraging news, and I think it is important to acknowledge that, global capital is also noticing this. And, as you can see in this chart, flows of foreign direct investment have also picked up more recently. And countries like Mozambique, definitely driven by investment in natural gas. Liberia, coming out of fragility. Ghana, Zambia, Madagascar, FDI has actually increased if you compare 2016 to the year 2000. Now, let me move to the trade, Africa's trade, and how the patterns of trade are changing. This chart is basically, illustrating, and I've deliberately compared trade between Africa and the US and China. The blue bars are Africa's export to the US. As you can see, they picked up significantly after 2004, peaked at around 2011, and since then they have been taken over by China, where most of African exports are now going to China instead of the US. This despite the availability of AGOA. And in my office, we're working on a research piece that is really trying to understand why most African countries have not taken advantage of AGOA. And in fact, only Lesotho has used AGOA to increase its exports of non-commodities. The rest of African countries have actually used AGOA to export more oil to the US. So what will it take for African and US investors to work together to actually create those factories in continent, add values to those African products and export them back to the US is something this forum could certainly help advancing. Now, if you look at the import side, you have a similar relationship, and it's even more stark. Most of African imports are now coming from China. And that's really clear in this chart. So the trade balance between Africa and China has worsened, probably more than that between the US and China. So I think it's important to see how African countries, African business communities can really strengthen relationship with the US to increase those trade and investment relationships. Let's take two of our largest economies. Nigeria. As you can see on this chart, Nigerian exports have certainly, are quite diversified. But if you look at the place of the US in this chart, the US is the dark blue. You can see exactly that Nigeria was exporting, to the US, and the US was the main export destination until 2011. And since then, it's been overtaken by India and other countries. And China certainly is growing as part of, as an export destination. The panel below is imports. And you can clearly see that, from the United States, imports have also been declining, but not as fast as the exports. So Nigeria is one case. South Africa is another interesting example where you would see that the United States' role has really, stopped from, the United States stopped being the main export destination in 2008. And, given the size of the South African economy, I think it is important to see what is possible to reverse that declining trend. So this is basically, and this slide is probably difficult to read, but just summarizing what are the major export destinations for African countries, for South Africa especially, and Nigeria. And you can see the shifting place of the United States. Now, let me end by discussing why I believe reforms, especially reforms to improve the climate for investment, matter. The World Bank publishes this index called Doing Business, and I'm sure most of you are familiar with it. Who have heard of doing business? Okay. So for those who haven't, I strongly encourage you to look at the ranking of your own country in the Doing Business index, because it does tell how friendly your business climate is. It gives you at least a flavor of what kind of policies your government should be implementing to allow private sector to flourish. It's not comprehensive, it's not exhaustive, but it's actually a very, very important, look at what government should be doing. And what we see from Doing Business 2018 is that the business climate in Sub-Saharan Africa still faces many challenges, but it is improving extremely fast. And it is improving faster than any other region in the world. What you have on this slide are basically the average number of reforms that are making it easier to do business. And we do that and compare countries, we compare countries to a frontier, what we call a frontier, what would be actually the ideal state of business. So, as you can see on this slide, the dark bar is basically showing that, the number of reforms, positive reforms towards the investment climate have improved. Sub-Saharan Africa as a region has the highest number of reform, 83, and followed by East Asia. So there are more reforms of the investment climate taking place in Africa than other parts of the world. And 75% of countries in Sub-Saharan Africa have actually implemented at least one business regulation reform in 2016 and 2017. So governments are conscious that we need to improve the business climate. Is it enough? Probably not. But I think it is important to acknowledge that those efforts are being made. If you take specific indicators, the average number of days to start a business in Sub-Saharan Africa has dropped from 20 to 22 days from 61 days in 2003. It was, so let me stop a little bit on this number. In 2003, it took, in average, 61 days to start a business in Africa. In 2017, that number was cut to 1/3. Right? So, frankly, this is important because otherwise we create the right, unless we create the right environment for private sector to emerge, we will not be able to allow the African youth to create its own business. It's going to be difficult to create the jobs that the African youth desperately needs. Overall, in terms of our ranking, countries like Rwanda, Kenya, Botswana, and South Africa are those that are doing most, in terms of reforming the investment climate. And it's no surprise that, investment is actually growing faster in those countries. It's no surprise that, growth is also highest in countries that are doing the best reforms. So, if you compare African countries, if you take this in perspective and say, yes, we are definitely just counting number of reforms here and there, but is it really the case? Then this chart is meant to convince you that even, countries in East Asia and India, and South Asia, including India, are actually reforming less, and they have probably a less favorable business climate than Rwanda. This chart is basically showing you the distance to the frontier. The longer the bar, the closer to the frontier you are. So you can see here that Rwanda, on the left panel, Rwanda has a better investment climate than China, than India and Indonesia, and even Vietnam. The reason you can then ask yourself, if that's the case, then why is all this FDI, all this investment flowing to these countries and not that much to Rwanda? Well, there are other factors explaining that, including the market size, including, infrastructure. But it's important to acknowledge countries in Africa that are really working hard, like Rwanda, to put in place the right environment for private sector development. Let me close by discussing what I see as important opportunities that should be seized by the investment community in the US to boost trade between Africa and the US, but also boost investment and job creation in Africa. First, the demographic dividend. Some call it a curse because Africa has the fastest growing population in the world. But Africa also has the youngest population in the world, which we see as an opportunity if we do the right investment, especially in education. So we believe that with an aging world, Africa will be home to the largest pool of active young labor force. It's projected to be around 2 billion by 2050. That's huge. Second business opportunity is urbanization. My office has completed a report last year on African cities. And what we find is that most of African cities are congested. They are costly because of that congestion, but they are also disconnected. It takes extremely long for people in Nairobi, in Dar es Salaam, to go to work. And my colleagues in the World Bank office in Tanzania have to spend 4 hours a day on the road to be, to go to work, and sometimes more. So they have to either leave their homes at 3 a.m., 4 a.m. to be on time for a meeting, or they miss it. And they have to leave the office either before 3 o'clock, or they would have to stay until 9 p.m. before they leave. So just think of how much of inefficiencies these are creating in our economies. So investing in urbanization in Africa is certainly an opportunity. And with new technologies, urbanization is creating a huge potential. The other important opportunity for business in Africa, we believe, is the fact that the size of the market will be growing as Africa's middle class increases. So export would be an opportunity to drive growth, but import substitution also would actually be a business opportunity. If you think of all African imports in foodstuff, African imports in basic consumables, this certainly creates an opportunity to invest in the continent, especially in the context of the Continental Free Trade Agreement that was just recently signed. So we believe trade within Africa will have to increase significantly. And intra-African trade so far has been extremely low. Less than 15% of Africa's trade is actually within the continent. And if you exclude trade between South Africa and its neighbors, that falls to less than 5%. That needs to change. And we see this as an opportunity for companies to invest in countries with the best investment climate to serve the whole continent. Well, what I would probably end on is what innovation is presenting as potential to Africa. We published last year, and I have a copy of that book here, we published a book on leapfrogging. Can Africa actually leapfrog? And this book was started from the thinking that Africa's growth model moving forward does not need to replicate what Thailand, Malaysia did in the 70s or what China did in the 80s. If we fully embrace technology and leverage innovation, we believe Africa can actually leapfrog. And in fact, it's already happening. If you go to Kenya or Nigeria, there are companies leveraging innovation today to increase productivity of agriculture significantly. You probably heard of companies like Hello Tractor, who are just Uberizing tractors in Nigeria and Kenya. And using their cell phones, farmers can just call a tractor and pay on their cell phone, and the tractor would be there in less than 30 minutes, plow their land for an hour, and that's it, right? This has the potential to significantly increase productivity in agriculture. There are technologies now increasing the quality of fertilizers from soil testing. There are devices now being used in Kenya and Nigeria where just by testing the soil, the information can be sent on the farmer's cell phone and allow them to have a better mix of their fertilizer and better yields. These are just two examples in agriculture, but there are many other examples that are abounding where innovation is already transforming Africa. And I would really urge investors from the US and on the continent to think of innovation as the future driver of growth. So, in summary, Africa is not a country. Africa, in average, is growing, and growth has actually rebounded. A number of African countries are very resilient, and some have actually grown faster since the commodity price shock. What is important is the macroeconomic policies have been improving on the continent. There are interesting transitions taking place in two of our largest economies, therefore positioning Africa's growth to be even higher in 2019 and 2020. Trade is and has always been a driver of growth, but trade between Africa and the US is under threat. We need to act decisively to reverse that declining trend. Finally, African economies are reforming their business climate, and this is the right time to invest in Africa. Thank you very much.